2025 was a tough year for the US dollar against most of the world's developed currencies. Now, two forces seemed to drive the story. First, markets began pricing in more aggressive rate cuts from the Fed than from its global counterparts. And second, a crowded positioning trade started to unwind. Traders had been long the US dollar and short the euro, and that consensus began to break apart. Starting in April of 2025, US two-year Treasury yields dropped from 3.9% to 3.5%. At the same time, German two-year yields moved the other way, climbing from 1.67 to 2.17. Now, neither move was especially large on its own, but the fact that they went in opposite directions broke a long-standing correlation. For currency traders, that may have been a signal to go long the euro and short the dollar. Now, the move that followed was significant. The euro gained more than 15% against the dollar between March of 2025 and late January of 2026. So what about for full year 2026? Well, the Federal Reserve expected to have a new chairman by May. If confirmed, that'll be Kevin Warsh. The key question is whether he resists or yields to pressure from the administration to keep rates low. That decision could set the tone for the dollar in the months ahead. On the other side of the equation, the euro is sitting near a 5-year high against the dollar. At these levels, you have to ask whether the bullish story has already been fully priced in. If it is, the pair could be vulnerable to a corrective phase. It's a setup worth watching closely. If a trader believes the euro will fall from here, they could sell the March micro euro contract at 1.1790 and target a move to the mid-January lows of 1.1600. A stop for this trade could be placed above at 1.1900. This trade can make $237.50 if the target is reached and risks $137.50 if you're stopped out of your level. Now, if a trader believes the euro will rally from here, they could buy the March micro euro contract at 1.1790 and target a move to the psychological level of 1.2000. A stop for this trade could be placed below at 1.1690. This trade can make $262.50 if the target is reached and risks $125 if you're stopped out at your level.